Welcome, everyone. Thank you, thank you, thank you. Nice to be here at the end of the day. So this talk, really, the story behind this talk really starts when the DAO guidance came out in 2017. And when I first read it, as it was sort of hot off the presses that afternoon, it struck me immediately that there had been a real leap in the facility that regulators had with the data sources in the industry. So as I was reading it, forget about what it was saying about the DAO. Everyone kind of knew that. That was not interesting and a little boring. But when I saw them ripping around Etherscan, and when I saw them ripping around all these data sources, I said, hold on, they know what they're doing. This is something else. They are tapped into the data sources and are finding out how these networks are growing. Of course, this work has continued over the years, and we've seen a whole new level of sophistication of regulators being able to navigate this industry. It's no longer, of course, what is this? It really is, how do we judge and benchmark some of these qualities of decentralization that are so important and vital to this industry? So the goal of this talk is really to go through some of these data sources and show how these decentralization benchmarks can be established and can be judged and can be viewed. So in order to even do that, though, we have to have a quick conversation about crypto economics. So it's not a fancy word. I'm not trying to create something totally new that is an abstract of economics. It's economics like we all know. Vitalik really got the conversation around crypto economics started. I think that cover of the paper here is from about 2015 when he was already talking about it. MIT has opened a crypto economics lab. A university in Canada recently has added a whole crypto economics division to their business school. So a lot of people are around the formal study of this subject. And so what is it exactly? It's the economics we know and love. It's just about choice. But it's not a subcategory of economics. It's really a subcategory of engineering and mechanism design. So crypto economics become really a study of the forces at work that are shaping the growth of decentralized networks. There is no CEO in charge here saying, you go do this, you go build this, this has to happen here, we're going to allocate some budget to this development. It doesn't work like that. Bitcoin, of course, developed extremely organically, and itself acts as a benchmark for what decentralization means and is and can be measured in this industry. So it is the economics we all know. There's nothing different about it. But it's about the choices that different groups make, the incentives they face, in order to be incentivized to contribute to a project and grow a decentralized network without this godhead of a company at the middle that is directing everyone's actions. So it's really just about those forces that shape it. But of course, how do we measure it? So the easiest way we can start to frame how to measure it is to take a bit of a look back and have a look at the market cycles and the data winners in each of those market cycles. So we'll go through this really quickly. So the 2013 price spike, a really important market cycle in the history of cryptocurrencies. That was a time, of course, when Bitcoin first went above $1,000 in its first meteoric rise. And that really produced two important data winners. CoinDesk was one of them. CoinDesk did something really unique in that we created the first ever indexed price of Bitcoin. So we just took a simple average of the spot market price in London, the spot market price in New York City, in Hong Kong, and in Tokyo, and we said we can divide by these four different spot prices and create a globally indexed price of Bitcoin, so something that hadn't been done yet. So that was what we did in 2013, and it of course was our #1 product and is still the reference price for Bitcoin in the Wall Street Journal and Yahoo Finance and several other publications, but was really the sort of backbone of early CoinDesk. The other major data winner was blockchain.info. Blockchain.info really looked into, it's a wallet, it's a great wallet, I'm sure a lot of you have used it. Blockchain.info really got into the metrics around the performance and throughput of each of these blockchains. They were the first data supplier that showed the importance of the hash rate and the growth of the hash rate, the mempool, the difficulty, block times, all of these things were really important. They were measuring constantly and creating the measurements by which we can see the performance of the network. Who's contributing, who's using, how many transactions are happening. So this was a really important benchmark that happened. So we can summarize what both of these data winners were in 2013. So CoinDesk provided this globally indexed price, and blockchain.info was really the performance metrics. In the years that followed, the flat market, you saw a lot of copycats. You saw a lot of people trying to capture and bottle the lightning that CoinDesk captured with the price of Bitcoin for other coins, or really the predominant thing was people trying to bottle that lightning that blockchain.info did for Bitcoin, but for other chains. So you saw a lot of different block explorers come out. You saw a lot of different data sites that were really trying to measure the throughput of Ethereum and other chains. But there wasn't a ton of innovation. In 2017, with the ICO boom and with the multiplicity of coins that were released, there was a major winner, and that, of course, was CoinMarketCap. CoinMarketCap was kind of abstracted. Everyone else was siloing the data they had per chain. I can even remember early debates in CoinDesk. Will we put the Ethereum price up next to the Bitcoin price? And there's all kinds of time wasted on this. The truth was, in the end, the market was demanding information about all of these prices and chains. And CoinMarketCap supplied that. They were the first data provider that was sort of agnostic about which chain they were following. They were saying, we're going to follow everyone. And we're going to really follow an important thing. When you have that multiplicity of coins out there, the most important thing really became the market cap and the exchange activity. So they started showing the exchange flows as a really important data point in all the exchanges for all the coins. So we were doing it pretty well for Bitcoin. Others were doing it pretty well for Ethereum. They were the first that went out and said, actually, we're going to see all the exchanges, all the flows for all the trade pairs, for all the coins that actually have liquidity and are traded. So that was remarkable that they had done that, and that became by far the biggest data winner in the 2017 boom. You saw a lot of copycats after, immediately, in fact, but of course they set the standard at the time and were the great winners and trendsetters of this data set. In 2018, in the bear market, we saw two really important trends. The first one was really all around finding out what was going on in GitHub. So that was kind of a reaction to promises made for the great ICO run in 2017, and then you wanted to find out if the people who raised the money were actually building stuff. So you saw a ton of data providers that came out and started looking into GitHub activity. So how many pull requests, how many merge requests, how many forks, how many people were watching, how many contributors, how many people were actually contributing code and other extensions on that platform. So there's been a few that have come out. This is CoinCodeCap. You've also got Crypto Miso, which is an important one that I've come across recently, which I thought was a really powerful one. Another service came out not long after. So they were really the GitHub trackers in the 2018 bear market, the other one. We've also seen in that same time frame a lot of social media data sites that are coming out to measure the traction that a lot of these chains are getting in social media. Really important because, of course, the buzz starts feeding into that cycle of crypto economics. People are talking about it, people are developing it, people are trading it, but talking about it is really important. So you're starting to see a lot of these sites come up that are really measuring what's going on social media. CoinGecko adds that to their site. CoinGecko looks at a few things. But really, in the end, when you add all of these things together, you start to get a sense of where this is headed. So the decentralization benchmarks really flow from these data sources. So we can really start seeing that every one of these market cycles has produced a new data source, a new data winner, and are really starting to capture each of these cycles. But now we're moving to a new era. And this era really has aspects of all of them. So at CoinDesk, we think about these things all the time, and of course, we're trying to think about what is the data service that will be useful for everyone to really judge how decentralized networks are growing. Once again, that is the definition of crypto economics for our world. What are the forces that are going to shaping these decentralized networks? So we came up with this bit of a matrix. So exchange data is a way to measure the extent to which this is being accepted around the world, the number of exchanges, the number of trade pairs, the number of economic activity, entrepreneurial activity, really about that coin which exists. And within that, you can see there's a ton of data providers. CoinCap is a good one. OnChainFX, which is really coin metrics. So coin metrics until now has been producing all that data for OnChainFX. OnChainFX is really the premier exchange data site today, so they even do much more than Coinmetrics and will be sort of growing further from that point of view. Nomics is great, CoinMarketCap is still great. All of these can help you give that sense of what's going on the exchange level and the data flows that come out of exchange activity. Network activity, once again, is on-chain transaction as opposed to the transactions that go on at exchanges. So that's really about user adoption. That's really about merchant adoption. Are people really transacting on this chain? Are people using it to help them create these digital relationships? Count of nodes, hash rate. You can add 24-hour wallets to this, the amount of wallets that have been used in the last little while to really understand more about user base. Social media, so these are the ones that go into network data. These are the providers of a lot of good network data. So Coinmetrics is probably the premier in segregating exchange activity from on-chain transactions. It's actually quite difficult to do, and they provide the best numbers from what I can see. CoinGecko, of course, does the same. 1ML is a Lightning Network data provider about that network. So that's the number of state channels, the capacity that can flow through it, DApp radar. Another one that's about the number of dApps being run on each chain, so you can once again see who's building on top of that chain in a pretty efficient way. Social media, very similar. You know, it's Reddit, it's Twitter, it's Facebook. Once again, there's a couple media sites that are really focused on it. And developer activity, once again, it's the watchers, contributors, stars, forks, and all of these guys are really about, you know, proving what's being built and showing who's actually committing code and entrepreneurial activity to these things. So OnChainFX does this. Flipside Crypto is a new one, quite powerful. At CoinDesk, what we did is we brought all these together, and we said, okay, if we can start measuring these effects, if we can start measuring the effects of crypto economics to build these decentralized networks, there's one other thing we should do to that. In this world of blockchains and cryptocurrency, we certainly don't want people who need a Series 7 trading license to be able to understand what's going on. Things should be a little simpler. Things should be quite visual, in fact. So we took this and decided that it was, in fact, the spin wheel of crypto economics, so that if incentives are healthy in each of these ways and grow in each of these ways, then in theory, the perpetual motion machine of crypto economics will start spinning. And that's what you want. That's what Bitcoin has achieved. Bitcoin's crypto economics, of course, begin with the block reward. So the first time they paid out got people to mine more because they wanted the Bitcoin. That brought value because people saw it was secure, and so on and so forth. Here you can see Ethereum as measured against Bitcoin. So we know that Bitcoin is decentralized. We know it's a commodity. We know it's certainly not a security. That's pretty established. If you saw last June, Mr. Jessup from the SEC mentioned that he also thought that Ethereum had effectively mutated in its life. From the moment it was issued, it wasn't probably a security when it was issued, but the crypto economic forces that went into growing Ethereum over those years allowed it to do something that no other security has done before. It mutated into a commodity. So basically abstracted itself and got away from SEC overview and really created a benchmark. So this product that we've released is still a beta. So we're missing a lot of data holes here. This is really a way for us to try to get our mind around this and add more data sources to it. But it does nevertheless provide an effective benchmark for what is a decentralized network. So we can measure several currencies against this. You can see Bitcoin Cash here. So Bitcoin Cash, heavily social. Not much else going on the network, not much else going on developer activity. Our data set is lacking, so we don't have all the measurements. But I would say that while this is probably not a super accurate picture of Bitcoin Cash right now, we're still adding other pieces. This is a sign you don't want in a healthy crypto economic environment. This would tend to suggest that this is much more centralized. And here you can see some privacy coins targeted against each other. Now, we also put something together that really gets into the 10-year history of Bitcoin. So it's a 2-minute video that we put together with 128 data sets based on all the data for Bitcoin over the last 10 years. There's a magnifying glass on it. There's a bit of a production value. I would love your comments after this because there's some debate internally at CoinDesk about whether this looks good or not. The magnifying glass will go away. So please, after this, if you think it was good, tell me. If you think the magnifying glass was terrible, please tell me. But this is Bitcoin over 10 years. And you can start to get a sense of, so 10 years plotted along these axes, and it's historically annotated. So in those 5 different data sets that I mentioned, you can start to see all of those data and news being plotted along these 5 axes. So anything that's social media, scholarly articles, what's going on for developers, what's going on for the first exchanges, when they started, when hacks happened, what's going on with the network. So you can see the hash rate goes to 1 gigahash per second, GPU mining begins, and of course the vertical straight up axis is price, so you're getting a sense of the price there. What these are also plotted on is 100% would be the all-time score for Bitcoin, and so whatever the price is today is a percentage of that. So when you see the percentage, what you're seeing is a percentage of the all-time high score. Satoshi Dice was a big network tool, transactions at 10,000 a day. I'm going to alert you to Silk Road being closed in a moment, and you'll find out what it did to the network. There it goes. Almost killed it. But of course, you can see from this the forces at work shaping a decentralized network. And this is what healthy crypto economics look like. And this is also a useful way to start benchmarking other chains and other coins that of course want to capture the forces of decentralization and crypto economics so that entrepreneurs enter this world, developers enter this world. What we're really talking about in the end is, we can't measure crypto economics or cryptocurrencies in terms of US dollar. I mean, are we being serious here? The point of it is that it does pose a competitive challenge to state-issued money. If people aren't aware of that, then I don't know what they're doing. It's definitely a part of the whole macro argument around Bitcoin. So what are we going to measure Bitcoin in 10 years or 20 years or 30 years? We can't keep measuring it in US dollars. The other thing we can use to measure it is simple. It's interest. Who's interested? Who's interested in investing their time? And that's really what it comes down to in the end. That's really what we're trying to measure with crypto economics and decentralization. How many people are investing their time? And yeah, things go a bit crazy, Things went crazy. They definitely did. It grew quickly. But that's really what we're trying to measure here. We're trying to measure who is investing their time. How do we measure who's investing their time, who's interested? That's it. That's all we're trying to do. So the benchmarks for decentralization in the end are who's interested. How do we measure their interest? We see where they're putting their time. If they're putting their time in social media, really good metric. If they're putting their time as a developer, excellent. If they're putting their time into the network, if they're mining it, if they're running a node, if they're using it as a merchant, if they're using it in any other kind of transaction, if they're using the network itself to formalize digital relationships, they're definitely interested in using it for their purposes. On an exchange, of course, we see those metrics as sort of abstracted from what a normal Wall Street way of looking at exchange flows would be. It's not just about volumes. It really is about how exchanges themselves see the coin. Are they listing? Are they creating many trade pairs? Do they see a lot of utility and usefulness in giving liquidity to this coin? Or is it really just a way to give some liquidity so that people can exit? You can actually start to see that by the dexterity and time each individual exchange puts into it. So in our tool that we have at CoinDesk, like I said, it's still a beta. We're still missing a ton of data sources. We really wanted to R&D the benchmarking of these decentralized data sources, combine all the data sources in the industry together, and then create a data visualization which would allow people to get a sense of the health of each network without having to understand every single obscure data point. We've also open sourced this methodology and these data sources on GitHub so people can actually contribute to it on GitHub and help us grow the tool and let us know where they're putting their work, their time, and their interest. So decentralization benchmarks, thanks for your time.